When was the last time you boarded a plane? The last time you went on a vacation? Or the last time you stayed at a holiday resort? This pandemic has really changed our lives. It has made us more confined to our homes, and this has severely disrupted the operations of cruise liners, aviation players, travel operators, and holiday makers. And one such company which was severely affected by the pandemic was Thomas Cook India. Right off the bat, this company has no ties with Thomas Cook UK. This is a company where Mr. Prem Watsa, who's considered as the Warren Buffett of Canada, is a major investor. Now looking at the stock chart here, the stock has fallen nearly 80% since its all-time highs. And now with the COVID-19 vaccination rollout throughout the world and with household savings sitting at a 20-year high, is this the right time to be looking at tour operators? Is this the right time to be buying Thomas Cook India? We'll take a look at all this. We'll discuss what the company does, what are its segments, what are the key opportunities, the key threats the company is facing. We'll also look at some of the key financial metrics and the performance indicators. And based on all this, we'll form our conclusion. So what does the company do? What are its operations and what segments do they operate through? Thomas Cook India has presence across 5 continents and 25 countries. This is not just a company who's involved in flying holidaymakers back and forth. This is a company which has presence in visa services, in forex services, in holiday homes and resorts, in B2B and corporate travel. And they operate through 19 brands of theirs. And I'm sure if you are a frequent traveler who used to travel frequently, you must have come across some of their brands, mainly DigiPhoto or Kuoni, because these brands are prominent players in the global travel industry. And one of the key points here is that their parent, their promoter, is Fairfax Financial Holdings. This is a company which is headed by Prem Watsa, a billionaire investor. Now, what opportunities does Thomas Cook India have in this market? Firstly, revenge tourism. We are seeing travelers explore destinations, explore domestic as well as international destinations like Maldives, Goa and Dubai. And now with the vaccine rollouts throughout the world and COVID-19 test requirements and quarantine rules to be lifted, we will surely see this trend strengthen. Secondly, the liquidity pile of households. Because of fear and panic, the Indian households have been saving at record rate since the start of the pandemic. This has left Indian households with an extra savings of nearly $200 billion, which is a 20-year high. And with this, it augurs very well for the domestic tourism industry. And thirdly, India's attractiveness as a tourist destination. Did you know that 10% of India's GDP stems from tourism? And even before the pandemic, the number of foreign arrivals to India was growing at a steady rate. And now with government coming in with e-visas and government GST concessions, it augurs very well for Thomas Cook India. And Thomas Cook has opportunities in other segments as well. Nearly 20% of Thomas Cook's group's revenue came from other segments like DigiPhoto, like Forex, like vacation and resorts. And the Forex segment has been resilient throughout the pandemic and was growing at a steady rate before the pandemic. And now we expect Forex to be a major contributor to the top line in financial year 2022. And lastly, the consolidation that has been taking place in the sector. Throughout the pandemic, many travel players, many tour operators, international as well as domestic, has gone bust because they couldn't bear the financial losses that the pandemic brought onto them. For example, Cox & Kings. Cox & Kings was the largest tour operator in India, and that leaves Thomas Cook with a larger market share to capture. Now, with hopefully the COVID-19 behind us, what other risks does Thomas Cook India face? What other threats do they face? Firstly, the resurgence of COVID cases, mainly the variants that have been discovered in other countries. And they are very prone to common risks like natural calamities, terrorism, or even political instability. And secondly, the depleting cash balance. Since the start of the pandemic until the December quarter, they've been burning cash at a rate of 20% quarter on quarter. This we'll discuss in the later section. Let's take a look at the financials. Let's see how they've been performing even under such heavy pressure. In the December 2020 quarter, their revenues were down by 86% compared to the same period last year. But their revenues were up by 104% quarter on quarter, that is compared to September 2020 quarter. And this was because of the demand pickup in China, UAE, Singapore, as well as the domestic market. And when we look at costs, they were burning cash at the start of the pandemic, and they still are. But in the last 9 months, they were able to reduce this bleeding and cut costs dramatically. In the last 9 months, they saved 570 crores in costs. But how did they do this? They cut their wages and salaries of employees by 30 to 50%. And they closed down 41 branches, which was yielding negative cash. And thirdly, with better debt management, they were able to reduce interest costs. As we all know, whenever a company, especially in the travel segment, undergoes a crisis such as this, its cash and debt position dictates whether the company will see the end of the tunnel. In this case, the company had a cash balance of 1,723 crores before the pandemic, and now having gone through a 2-month full domestic lockdown and having faced several travel disruptions, they're sitting at a cash balance of 553 crores as per the latest December 2020 quarter. But here's the catch. In January, they raised additional 450 crores from the parent, which was earlier mentioned, Fairfax Financial Holdings. And with that, it leaves them with a cash balance of 1,003 crores, which is sufficient for them to last 2 years, assuming that the travel demand stays depressed and crumbled. Moreover, their numbers have started to tick. The MIC segment, aka the B2B segment, is witnessing a month-on-month growth. We forecast a similar reflection on the travel segment on the DigiPhoto, Forex, as well as the vacation homes segment. With that, they are also running promotions so that they can capture this pent-up travel demand and capitalize on this opportunity. And hence, in this Q4, in the quarter ending March 2021, we expect a robust performance from Thomas Cook. When things settle and when vaccine rollouts are implemented successfully throughout the world, surely there's a desire amongst all of us to go places, to get on a plane, to go to our favorite vacation spot. With that, it will make Thomas Cook the strongest domestic tourism sector player. And now, with the severe cost-cutting efforts, they will emerge as a more profitable player than they were. All in all, with a strong financial position in terms of debt, cash or revenues and the reduced costs, there is definitely a 2x to 3x multi-bagger opportunity for us here investors.